Hi there, welcome to Nepi Invest. So A2 Milk have released their half-year results today and the share price is currently down about 16%. So in this video, I'm going to be talking about why the share price is down by that amount. And you might be saying, well, duh, it's fairly obvious. The market doesn't like the results, but it's not quite that simple. So I'll be discussing why the share price is down, and I'll also be discussing why I'm a little bit annoyed about A2 management right now, particularly with something they've mentioned in the outlook. Now, to understand why A2 Milk share price has dropped 16% today, we have to know what drives a market response to financial reports. So it's not as simple as the results themselves. There's other factors at play here. The first factor is comparison between the previous guidance the company has given and the results. So the results can hit, miss, or exceed previous guidance. And I just saw an example today. Another company I own, Ambertech, their results exceeded previous guidance and the share price has increased 40% today. The other factor is some sort of outlook from the company or an update to future guidance. Now, another example of this was Coles the other day. They had good results, but their outlook for the next year and a bit was fairly bearish, and the market dropped the share price by 12% on the back of that bearish outlook. So let's compare A2 Milk's previous guidance to the results. So the previous guidance was released on the 18th of December 2020. So they expected revenue to be in the order of 670 million and EBITDA margin to be around 27%. So how does that compare to the results? So the results released on the 25th of February were in line with guidance. Revenue was a little bit higher than actually guidance. It was 677.4 million, and EBITDA margin, when you take away the acquisition costs, was around 27%. So they hit guidance. This could not be or is not the reason why the share price of A2 Milk is down 16%. So now let's look at whether the management have changed financial year 21 guidance or there is something in the outlook that has spooked the market. So previous guidance released on 18th of December suggested or expectations were revenue to be between 1.4 and 1.55 billion and EBITDA margin to be between 26 and 29%. So have they changed those expectations? So these are the new expectations or guidance they've given us in this report. Revenue to be on the order of 1.4. So that's not a big change. It's on the lower end of their previous guidance. But what has changed is the EBITDA margin. They've lowered it from 26 to 29% to 24 to 26%. And this is what has spooked the market, this downgrade to margins. And I think this has been the major force in the decrease in the share price of A2 Milk on the 25th of February 2021. Now to something that really annoyed me when I read the outlook. Now this is going back to December 18, and this is just a grab from my presentation in regards to assumptions management have made during their annual meeting in November. So they expected a significant increase in revenue in the second half of this year based off a number of key assumptions. Now they had to acknowledge on December 18 those key assumptions were completely wrong, and that's the major reason they needed that second downgrade. So I think it's really important that you should not make assumptions. You should always think of the worst case scenario and manage or plan around that. So what have management done in the outlook? Well, they've made more assumptions. They've actually said the outlook for financial 21 is based off assumptions that they're going to reactivate their Daegu and reseller channel, and that's going to deliver a significant improvement in quarter-on-quarter growth. I can't believe they did this again. So they either have to be really confident these assumptions are going to come true, or they've made the same mistake again, and that's not a good thing. Now to the chart of A2 Milk, and it's an ugly, ugly looking thing, particularly for shareholders just like me. Now, I've taken this from the share price high that was reached on the 7th and 8th of July 2020. Share price got to $20. And that means it was a 10 bagger for me because I bought into A2 Milk at $2. And ever since then, the downhill trend of A2 Milk share price has been ongoing. This is what happens when a company keeps issuing downgrade after downgrade after downgrade. Now, I don't have complete confidence and trust in management of A2 Milk that this is going to be the last of the downgrades. I would not be surprised if we saw another downgrade in the future, and that would not be a good look for current management, even though we have a new CEO in tow. So, if I was not a shareholder right now in A2 Milk, I would not be buying this company right now because there's negative sentiment in the company. The share price is in a well-defined downtrend. So what I'll be waiting for is a change or a shift in sentiment, a change in the share price trend, and the release of some good news from A2 Milk management. Until I see those three things, I would not be buying this company at all. Now, even though I said I would not buy A2 Milk right now, I'm not a financial advisor. So you could think completely different to what I'm thinking and think this is a great buy, still at these current prices. And since I'm not a financial advisor, you should not take anything I say as financial advice. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. See you later. Bye.